Hello and welcome into the KE Report. Shad and Corey here as your host, and today we're getting an update from Thor Explorations. Thor is traded on the TSX.V under the ticker THX, on the London Exchange under that same ticker THX, and on the OTC markets under the ticker THXPF. Now we are joined today with the president and CEO of Thor Explorations, Segun Lawson. Segun, always great having you on the show. I was bending your ear a couple of weeks ago, wanted to get you on to talk about the newly announced dividend program, but on the 27th of May have also announced your financials from the first quarter. So I think that's a great place to kick things off for today. I won't steal your thunder, but give us a high-level shakedown of some of the key metrics from the first quarter financials. Looks like a really healthy quarter for the company.
Yeah, thanks for having me on again. And sorry we couldn't speak at the time, but I think now's a good time to give you a wider update, should I say. And, we kicked off the year with a very solid start. 22,790 ounces poured, which is in line with our guidance for the quarter and guidance for the rest of the year of 85 to 95,000 ounces. We did that below $1,000 per ounce, so at $950 per ounce all-in sustaining cost. And that obviously resulted in a very strong financial performance. Revenues up at just over $64 million, EBITDA $43 million, a net profit, or should I say net income for any quarter in our history of around about $34.5 million. And it's probably worth emphasizing that we did this while unwinding just over 5,000 ounces from our hedge book, which were heavily discounted. So now we're pleased to have come out of that quarter and be into our second quarter, with production in line with guidance, our cash flows and cash balances increasing month on month. We're completely unhedged, so we have full exposure to the gold price. And as you know, we've repaid our debt completely at the end of last year. So our debt's paid off, our capex is paid off, and we're in a position where we're building up cash and returning cash to shareholders at the moment, whilst aggressively exploring in 3 jurisdictions. So we're very busy at the moment.
Yeah, Shagan, the one thing that really stood out to me is compared to Q1 of last year, where you were in a net debt position of over 14 million, you're now in a net cash position of over 24 million. Now, let's talk about that cash management strategy here, because you're drilling, you have aggressive drill programs going on, you're continuing to produce, and you're also returning money to shareholders. You made that maiden quarterly dividend of 12.5 cents per share. Talk to us about how you're going to, again, manage the cash here. You're returning it to shareholders, but you're also drilling. So how are you going to manage all the cash flow that you're generating here while still growing?
So it's slight correction. It's 1.25 cents per share, not 12.5. There was a typo in our first announcement, which we corrected. But yeah, so look, we're in a position where, we're in a strong gold price environment. We're building up very healthy cash balances. We have repaid our debt. We've set out all our milestones over the next 12 and 24 months. So we have a line of sight to what we want to do. And we think we can fully fund that from our own treasury. At the same time, we're able to build up a further buffer at these gold prices. And given we're in this gold price environment, we think we can enhance our value proposition by returning money to shareholders in a sustainable manner, which is what we're doing now. And it's still an attractive enough yield to our shareholders. So, we decided it was something that would be beneficial for all of us, makes us a better value proposition. We're still able to advance our pipeline. We've taken steps like purchasing our own drill rigs in Nigeria as well. We still have a very low cost if you compare us to our global peer group. So a very healthy margin. And we think that, we're able to manage this cash even by stepping up our exploration to around about that $18 million per year for this year. So yeah, that was the rationale behind it.
Well, Shagun, it's really the healthiest I've ever seen the company on a financial standpoint in your existence, but it's also just fun to have followed it from, moving into first production to growing a second project, development project, to paying down Segilola and the debt, and now to see the higher gold price in a debt-free scenario where you can plow money into both returning to shareholders, but also into exploration. Let's dig into the exploration side at Segilola. It's kind of a two-pronged approach, as we've discussed in the past. You're drilling at depth under the pit for a potential underground scenario, and you're drilling regionally. Let's go with the under the pit drilling first. The drilling at depth, the goal here is also to extend the mine life here at Segilola.
Yeah, I mean, that's easily within our portfolio the lowest hanging fruit. You know, we have all the equipment, we have the mining contractors, we have a pit, we've dug a big hole in the ground, should I say. We understand the geology, and we had a proof of concept drill program that's proven successful. So it's just a case of taking it step by step and trying to increase the resource, seeing how much more we can take out by deepening the pit, and then where that inflection point is to transition to an underground, after which we would look to transition to an underground operation. So that's all ongoing. You know, that's highly value accretive. You know, every single ounce additional to what we have in our DFS is hugely material. And hence, this is ranked number one on our priority list. And the success rate of the proof of concept drill program has justified us pushing ahead with this. So it's not the kind of program where we can release a couple of drill holes every week or 2 weeks. So we've been drilling since our last set of results in January. We're going to push through, get a position where we can show a trend, and then release the drill results there. And then, like you said, in parallel, we have had success in drilling some small satellite targets in and around the pit, which can be aggregated into something material. That's all continuing, fleshing out historic targets which we've drilled, and also drilling new targets as well. In addition to that, we've assembled a new project area, which we've identified an area of gold anomalism in the streams and the soils, and we're excited about getting those drill ready as well. And we will be looking to drill there as well later on over the next sort of 2 months as well. So there's a lot going on in Nigeria. There's drilling underneath the pit, which is also investigating the underground and deeper open pit. There's regional drilling, and there's targets that are potentially, you know, standalone or that can be incorporated into a much later mine life.
Segun, I'm curious what a reasonable time frame would be then with this drilling, with these different targets to bring it into potential production scenario. Obviously, that drilling right around the mine below, that all is more near-term production potential. But this regional exploration, even some of the, let's call it more advanced targets, what is a reasonable time frame that you could bring these into some sort of a mining scenario?
Well, we want to get to a position before the end of this year where we update shareholders and investors with our updated mine life. And then we will take it from there in terms of what exactly the mine plan is. So first things first is find these ounces and then make them economic through the drilling. And we'll be doing that later on this year.
All right, so a lot going on around the Segilola mine and project, under it, around it, and even regionally. So we'll keep tabs on that drilling when you release it to the market. Let's pivot over to another jurisdiction and project number 2 here. Hopefully mine number 2 in the future, Segun, and that's the Duta Project in Senegal. You've been busy here for a while, drilling it out, building resources, wrapping economics around it, and then you picked up some new land, the Duta West license, and you're now exploring the Baraka 3 prospect there. So talk to us about some of the regional exploration at the Duta Gold Project.
Yeah, look, we've been very encouraged by the initial drilling at Baraka 3. Needless to say, it threw us off course in terms of delivery in the timing of the PFS. After having several internal discussions, we believe it was the right decision to make. And we want to do that as quickly as possible. We've identified a structure, we've drilled discovery holes in it. We have 3 rigs on there at the moment, drilling very aggressively. And we expect that drilling program to be wrapped up very soon, with the results, the timing of the results being at the mercy of the labs. But in fact, we're pretty confident these results will be incorporated into the PFS, which will enhance the overall project economics. And we're doing that as quickly as we can at the moment. So yeah, look, we're encouraged here. We're looking forward to getting this moved along. And I think The encouraging thing here is that we've done a lot of the PFS work streams. It will be a detailed PFS. It will be something we can fast track from PFS to bankable. We want to build this mine very quickly after. We're not here to carry out long academic studies here. We have the mining contractor in conversation. We have the EPC contractor in conversation. And, we're very encouraged by the results here, which is making it a better overall project.
Segun, can you just remind everybody resource size, even resource potential here that would play into that PFS if you are going to be incorporating the current drilling?
Well, the historic resource here is 1.78 million ounces, 50/50 indicated and inferred. And then obviously we're looking to build on that based on what we have here in Baraka 3.
One Segun, you're also drilling a little bit deeper along the main trend between the Makossa Main, Makossa North, and Makossa Tail, because a lot of the previous drilling was more shallow, so maybe talk to the depth extensions.
Yeah, look, we know there's geological continuity. Statistically, we didn't have drill holes filling these spaces. So it was also a case of, whilst we're still drilling, trying to knock this one out by converting a lot of this inferred into indicated that already lies within the pit, but like you correctly say, at depth as well. So all enhancing the project and enhancing the project economics. And yeah, look, we've completed the drilling which we've done on the original Makossa and Makossa strike length. And now it's just we're just pushing hard on the Baraka 3 target.
Let's also move down to Cote d'Ivoire. You have, I guess, earlier stage exploration going on down in that country. Walk us through what you're doing here and how Cote d'Ivoire also fits into the overall strategy.
Yeah, look, for us, it's been a great diversification of jurisdiction. Cote d'Ivoire has been a champion and a very good case study in terms of West African gold discoveries being financed, developed, and operated into operating mines. We spent probably a good 12, 18 months looking around for the right projects. One we bought from Endeavour, which was a Guichi project, which was a bit more advanced than our other two licenses. And then we acquired this great bit of ground, the Marahui project in the northeast of the country. I'm pleased to say, as much as we were encouraged by the Guichi project, and we have a drill program there kicking off imminently, the contract's been signed and the rig's been mobilized. That program is based on some historic drilling and our reinterpretation of what's there and our structural studies. However, moving on to the Marahui project, we kicked off with some soil geochemistry, which we overlaid with some geological mapping, aeromagnetic surveys, and we've identified a couple of great targets. First one being the Ekra prospect, which you will now see in our latest presentation. But this is a soil anomaly that has grown and kept on growing, which is now 5 kilometers long. But I think in addition to this, we've actually have very high grade rock chip assay results for the entire 5 kilometer strike length to confirm this gold mineralization on this 5 kilometer strike length. And when I say very high grade, we've got 29.9 grams per ton, 28 grams per ton, 13, 10, for the entire strike length. So this for us is a very exciting grassroots project. For me, it's easily the most exciting project we've ever had at this level. And it's looking like it'll probably leapfrog Guitry in terms of priority in Cote d'Ivoire as well. The work that's ongoing there is continuing to map and seeing how much longer we can extend the strike length. And then the original plan was to commence drilling here in late Q3. We're reviewing all that now and seeing the best time to start drilling. Obviously, we have the rainy season to come in July as well. So we don't know if it's worth drilling this before or after, because I have the feeling that once we start drilling this, we won't stop for a very long time.
I think that's a good problem to have, Segun, is that it's a target-rich environment where once you start, you're going to stay on it with the drills. I guess that brings up an interesting point. Just from a big picture standpoint, when you think of Thor Explorations, you're being graded and judged probably through the eyes of being a producer. But I've always maintained that producers are often the best explorers. And if you think about it, you've got 3 projects, 3 jurisdictions. One is producing, but lots of exploration around it. One is at development stage, moving towards the feasibility study, but lots of drilling going on and already a big deposit. And then all these exciting targets in Cote d'Ivoire that are exploration focused. How do you want people to think of this company? Because you're really operating on all cylinders here at multiple projects in multiple stages of the mining cycle. So how do you want people to think of Thor Explorations from a big picture standpoint?
Yeah, look, I think first and foremost, we're generating cash and we're returning a portion of this cash to our shareholders. So we do have a real company valuation based on the cash we're producing. And the fact that we're generating strong cash enables us to deploy this cash into our projects. And I think we have a fantastic pipeline of projects at different stages of development. We have a project that's producing and looking to extend the mine life. We have a project to be built, and we have very good ground in some of the best areas of West Africa that we're exploring at grassroots level. So all our pipeline is currently organic. I believe we can deliver all our projects that exist in our pipeline without any equity dilution. And this is all going to be underpinned by real cash flow coming out of Nigeria, the Segilola project. So I think investors can have the comfort of knowing there is a baseline valuation which has a yield in the form of dividend, at least for the next 2 years. There's blue sky exploration potential in all 3 countries. Extension of the mine life in Nigeria is hugely value accretive to the company. And we have a project to build in Senegal, which we're pushing ahead with. And not only that, we have some fantastic early stage opportunities in Cote d'Ivoire, which have, from the initial exploration, have generated some fantastic drill targets as well, which we're all very excited to own and to start advancing.
Segun, just a real quick follow-up on production guidance for this year, between 85 to 95,000 ounces, all-in sustaining costs on the high end of $1,000 an ounce. Look, this company clearly making money, especially at this gold price. A lot of investors too want to see that growth, which that's why you're drilling. That's why you're looking at extending mine life and building another mine. But what can we look forward to after 2025? What sort of production growth can investors look for to take advantage of these strong metals prices?
Look, the back of the envelope, we're looking to build a similar size or slightly bigger mine in terms of ounce production in Senegal. So we're looking around about 100 to 150,000 ounce per year production in Senegal. Hopefully if we extend the mine life in Nigeria and they dovetail, we'll be in a position where we're producing for 2 mines at the same time in Nigeria and Senegal. So that takes us to that sort of 200, 250,000 ounce region. And then, who knows what we have in Cote d'Ivoire. If that prospect ends up looking like a good resource, it's always something that we can push the pedal down harder and accelerate.
All right. Well, I think we'll wrap it up there for today. But a lot of things happening with Thor Exploration on the production, development, and exploration front, and a lot of news flow out of the company and coming news flow. So we'll definitely keep following along with it here at the KE Report. And for those of you listening in, if you want to follow along with all the news, definitely click on the link below in the show notes. It takes you over to the company website, straight to their news section where you can follow along with updates as they hit the market or sign up for updates that hit your email inbox. Segun, keep us posted. We'll get you back on for an update. And as always, looking forward to our next conversation.
Great. Thank you very much.